You got me at slide. Go to the front slide, Andres, making sure.
Yeah, this one's the front slide.
Okay. Hi, good afternoon, everyone. It's Tony Thompson here with NAMBA. First of all, I want to thank you for joining us for today's webinar. We're going to give it about one minute. It's 2:01 Eastern time. So we're going to give it a 1 minute and we'll be getting started soon. Just to make sure that you can hear or see us, if someone can respond to the chat function that you can hear and see us, that would be great. Just to do a check.
All
Great.
right.
Thank you. Thank you, Janet. So we'll give it just a second, guys, and we'll get started with today's webinar. Okay. Well, good afternoon, everyone. For those who I have not had an opportunity to meet, my name is Tony Thompson. I'm the founder and CEO of NAMBA. I'm excited to have and present and be a part of moderating today's webinar with Finastra, who's our Diamond Plus partner. We thank them for their partnership, and certainly we're excited really talking about today's webinar, which is a very timeful topic for lenders, which is how to attract millennial home buyers with a unified mortgage process. And certainly in today's environment, when you're thinking about creating a great experience for the borrowers, particularly for millennials who are and will be one of the fastest cohort buyers in the future for many lenders, how do you make sure that you've created a great experience and that you create a connected experience that can equal and ultimately end up creating a great consumer experience for that buyer in the future? So before we get into today's webinar, Andres, if you can move to the next slide. I do want to take this opportunity to let everyone know that we are really excited to announce our new home for Connect 2022. This year is going to be in beautiful, sunny Orlando, which is where I'm in today. It's about 85, 87 degrees with blue, sunny skies. And we want to ask you to join us September the 15th to the 17th at the JW Marriott Bunny Creek on the home of Disney. Come join me, Minnie, and Mickey. This year, we're making it a family affair. So we've got plenty things for you to do to bring your kids as well to enjoy this experience. To learn more, simply go to namba.org to learn more about Connect 2022. Hope to see you in Orlando this fall. So before we get started, we would like to take an opportunity to introduce our speakers for today. Again, my name is Tony Thompson, founder and CEO of NAMBA, but we also want to give Leslie Malicki Benson an opportunity to introduce herself, who's the Director of Partner Solutions with MGIC, and Mary Kay Thuralt, who's the Director of Partner Management for Finastra. Leslie, if you could just share a little bit about your role within MGIC, and then Mary Kay as well.
Sure thing. Thanks, Tony. Leslie Malicki Benson. I'm with MGIC, Director of Partner Solutions. I head up our API and B2B technology channels at MGIC. Also participate heavily in the MISMO organization, in the Residential Standards Governance Committee, new incubator group. I'm the co-chair of API Community of Practice, co-vice chair, and heavily participate in the MI Community of Practice with the MISMO organization. So today we will be bringing up a lot of the MI related APIs that stem from the MISMO organization as we go through our topics.
Great, thank you. And Mary Kay?
Hi, I'm Mary Kay Thuralt. I'm the Director of Product Management at Finastra. I've been with Finastra for 21 years, always on the, as you know, probably know them, the MortgageBot products. So Fusion Originate MortgageBot and MortgageBot LOS. So I head up both of those products and bring the technology to you.
Great, and certainly today we will be talking about how do we infuse that technology and help lenders, create a great experience as well. And so both Leslie and Mary Kay, thank you for joining me today. We're going to go through the agenda and then jump right in it. So first and foremost, we'll talk a little bit about the purchase market and home buying trends. Last Friday, we happened to have at our State of Town Hall, we have every year, Lawrence Young, who's the chief economist of the National Association of Realtors. And so he shares some really interesting perspectives and dynamics about the real estate market. We'll talk about those a little bit, as well as upcoming some of the trends and characteristics that we're seeing from the millennial home buying sector as well. Then we're going to get into how can APIs and data really enhance the borrower experience for a lender, and then transition into talking about efficiencies now more than ever as a lender, making sure that you can look at having efficiencies within your borrower experience from beginning to end is very paramount. And one, in terms of reducing costs, but two, most importantly, in terms of customer satisfaction and customer engagement. And so what does that look like? What are some best practices? And then last but not least, we'll talk a little bit about certainly the market in terms of talent. How do we attract and retain talent in an environment like this where the war for talent is just increasing each and every day for lenders as well as providers? And so what are some best practices that lenders can think about as we look into the future of the what we call the next evolution of the worker, and what their experience should and what they're looking for as it relates to working with a lender? And then last but not least, our panelists will be here to answer any questions that you may have throughout the webinar. So as we go through this webinar, guys, please note that one, it is recorded. Two, for those who are joining us on Facebook today live, welcome to Facebook as well. And then third, if you have questions, please send those to the chat function, and we will make sure at the end of today's webinar, we try to save some time to take Q&A as well. So we're going to jump right in it and kind of go and talk about here a little bit of what we're seeing around the marketplace. And certainly, if you've been reading headlines that within the market in terms of real estate sales, man, it's been a roller coaster over the last 12 months in terms of just the market being on fire. Obviously, though, from a rising interest rate environment, we're starting to see a little bit of that marketplace, trends, come down a little bit in terms of the amount of buyers who are looking to purchase a home. And for many lenders, obviously, this is going to represent a challenge in terms of how do we make sure that we connect with that right buyer. So, Andreas, if you can go to the next slide, that would be great. So what we're seeing right now, first and foremost, a little bit of information. According to the National Association of Realtors, they published their 2021 stats, which has about 37% of borrowers being millennial between the ages of 24 and 41. It looks like I'm not in that millennial stage a little bit. So obviously, I can't consider myself on the upper spectrum, although I wish. But certainly, what they've seen, and one of the stats that have came from this recent survey is that 31% of all purchases in 2021 were from millennials from the first-time home buyer category. Additionally, at Cultural Outreach, which is part of our NAMBA family of companies, that's our multicultural marketing arm within NAMBA, every year we publish a next gen buyer report, home buyer report as well. And this next gen home buyer report takes a look at a survey of over 1,100 millennials who went and purchased a home, moved into their home in the last year. And from that, it helps us identify and understand what are the needs that they have as it relates to financing and looking for a home. What did they expect from the experience that they have in terms of many of them purchasing that first-time home, that home for the first time? And then last but not least, what are some of the technology applications, resources, and tools that they're using? And so from the 2021 Homebuyer Report, I want to add a couple of additional notes from the NAR report as well. First and foremost, what we found is that in our survey, most recent survey of the next gen buyers for millennials, 92% of millennials started their home buying search on YouTube, which was a really astronomical, number when you think about the many different places that they can go to start that, whether it is social media, whether it's the internet, whether it's family, friends. 92% chose to start that search on YouTube. And the biggest reason why was, as a millennial, first and foremost, they like to research and learn and educate themselves. But another statistic that is important that lenders need to be aware of and think about, which is why having a very streamlined, efficient process for these buyers and potential buyers are critical. Only 28% of the millennials who were surveyed in our next gen homebuyer report at the end of that transaction felt like the lender did the right thing and they trusted the lender to help them make the right decisions through that home buying financing process. 28%. So 1 out of 3 millennials who purchased and financed and moved into their homes felt like at the end of the day, their lender actually had their best interest in hand, helping to guide them through the home buying process. Part of what we're going to talk about today in today's webinar is helping lenders to understand how to maximize and create efficiencies to ultimately build trust, and most importantly, to create a greater client and consumer experience, particularly with the millennial category. Third, other key fact that I think is important to note for this home buying generation is that they wanted to have a process that was omni-channel, that was easy to move in and out in terms of how they connected and worked with their agent, as well as a lender through the home financing process. Tony, what do you mean when you say omni-channel? First and foremost, we're talking about the ability to engage with them through multiple channels: email, text, phone, and then ultimately in person. And so for the millennial home buyer, they want the option to move into these different lanes as they go through that home buying experience to ensure that they understand, but also when they do have a question, that they can come in and meet in person, or they can pick up the phone and call. And if not, if it's something that they don't believe that it requires an in-person visit, then for the most part, they just want you to simply text it to them and communicate that way. So it's really interesting that lenders have to understand as we move forward, these trends are here to stay. And certainly when you look at the Gen Z that comes behind the millennials, their needs and their trends are even more important to understand, because over the next 10 years, they will be the largest cohort of first-time home buyers. On one little side note, it's really funny to talk about, home buying trends. Yesterday here at NAMBA, we welcome and we had a cohort of high school students, high school seniors. And we were talking to get to know these seniors. They're doing a summer internship with NAMBA. But I asked the question to them, how do you guys communicate? Because I was really interested. Remember, these are 18-year-olds or 17-year-olds who in 10 years will be homeowners or potential homeowners, right? And so it was really interesting. I started asking them about what mediums of communication are you currently using today to engage and communicate with your peers or just to learn. So we started going down the list and I said, Facebook. And they said, nada. And then I said, what about Twitter? Nada. And then I said, okay, well, what about Instagram? Believe it or not, only about 10% of our interns actually were familiar with Instagram. And then I said, LinkedIn. They're like, what's that? Obviously, but I just wanted to see, have they ever heard of that? They never really heard of LinkedIn. We're given the benefit of the doubt. They're only high school seniors, right? But remember, in the next 10 years, that high school seniors are borrowers. So I finally said, okay, if you don't use Twitter, if you don't use Facebook, you really don't use Instagram, what do you use? And then I asked myself, well, what about TikTok? And they said, nah, we don't really like TikTok. And I said, really? Wow. There's a perception out there that every high school senior loves TikTok. So I finally broke down and said, well, tell me, the older millennial, ex-millennial, what do you use to communicate and what do you like? Snapchat. Snapchat. So think about it, guys. Facebook, Twitter is old when you're looking at how to engage and connect. Instagram, TikTok, and to a certain extent, Snapchat. Hopefully, as they graduate from college, they won't be on Snapchat. If so, we all better go get a Snapchat account because we're going to be really need to learn how to do Snapchat to communicate. But that just shows you where we're headed, the evolution of how the future buyers, which are millennials and Gen Z, are going to want to communicate. And most importantly, how lenders will need to reach out and engage them in terms of introducing their products, their services, and building trust. So that's a little bit about the trends of where we're at. Mary Kay, I want to kind of talk to you and have you to share a little bit about on from a statistic side from Finastra on the technology side, what are you seeing there on your end?
Yeah, Tony, thanks. We're definitely seeing the increase of the switch from the refinance market we had in 2020 to a full-on purchase market. I looked up some stats in our database, and last year we did 58% of our business was purchase transactions. This year, year to date, it is 75%. So we've definitely switched from doing refinances. There's still a little bit out there, but full on purchase transactions. I also looked at our product called Data Insights to see if we match up with the National Association of Realtors statistics. And we're pretty well on to those statistics as well. Our median age of our borrower right now is about 43. We're seeing 71% of our transactions being purchase transactions with low down payments. So loan to values above 80%. And again, sticking with the statistic of that first time home buyer. So it's really important that lenders out there know who their borrowers are and can cater to them. We're seeing good credit scores. 59% of our borrowers have credit scores between 700 and 799. So they are good borrowers out there, but not a large down payment. And a lot of them are first time home buyers. Great. Leslie, do you want to tell us some information that you have about their behaviors?
Sure, sure do. So, with those first time home buyers in mind, you want to definitely cater to that audience. And, first and foremost, and Tony, you hit on this too, is, mobile, being mobile friendly, having solutions that work on their smartphones and their tablets is going to be job one, table stakes with this audience, and even generations beyond this audience. I think we're all there, and everyone kind of knows that. But one thing I would say about having those mobile solutions in place is I'd recommend you have a process in place to make sure that as technology evolves and the new smartphone versions come out, that you're routinely checking back in with those solutions, making sure they continue to work as the smartphone and tablets, the operating systems are upgrading in those platforms. So just have a process in place to keep a routine check on your mobile friendly solutions that are out on the market. Then second, I would bring up that, this is in a study, again, from the NAR group, that, we have, they have to be online. Everything has to be online. But if you look across all of our generations, the first thing that we do when we're thinking about buying a home is we start shopping, because that's what we do in America. We're shoppers. So we're out online looking for that new home. But what's different about this first time home buyer audience, of course, is that 17% of the time, they're looking for that education, as Tony mentioned. So that is going to be a niche play with these first time home buyers is, the first way that you can engage with them, and sometimes first in wins, is make sure you have some educational material online, mobile friendly for them. And if you're looking for that type of information and content, you don't have it yet today, I'm going to point you towards MGIC. We have a lovely website specifically for this audience called readiness.com. It has a ton of great content all the way from, and I'm starting to shop to, I need to work with a loan officer, to what's closing like, all the way to the point of, you have the keys in your hand, now what? So please take a look at that website and link to it from your materials and solutions, or steal ideas from it, or whatever you want, but a lot of great stuff out there. Third thing I wanted to point out, a study from Pew Research, and this has to do with the social platforms. And Tony, it's so funny that you're bringing up what the high school kids are after, and it has changed from, this buying group today. They're on Snapchat, they're on Instagram, they're on Twitter, and they do use TikTok, this demographic that we're talking about. And you can just see how it changes. Just in a few years later, they're saying, what's Instagram? So, you have to, keep up on the social media and know your audience. But, if you develop materials, videos and such, you can take a video from YouTube and repurpose it for TikTok and repurpose it for, what's the next thing down the road. So just make sure you're keeping an eye on social and what's important to your target audience. And I'll put a challenge out there for anyone who wants to create an educational, engaging video for TikTok on the home buying process. So
definitely not me. Definitely not me.
I'll put that challenge out there for you. And then fourth on the list here, what I wanted to go over from the Stratmore group is, how this first-time home buyer audience likes to communicate. And email is not number one on their list, but it is a form. As Tony was saying, multi-channel is important, but that's not going to be their go-to place. So if you're reliant on email alone, you need to supplement, okay? And text messaging is the third preference for this group. Now you can have email messages ready to go, but you can't just cut and paste those 3-paragraph communications into a text message. So please pare it down and make it text friendly for this audience. The second mode of communication that they prefer is a mobile app. So if you've already dabbled in a space where you have a mobile app out there and ready for them, that's a great direction for them. They like the push notification and to be able to control how often and how much information they're receiving. And you can, put some gamification in there, some badges and rewards for, reading the educational content or what have you. So make sure you keep that in mind. But, from the Stratmore group, the number one mode of communication, I found this pretty surprising, was that they like the good old fashioned phone call. So, when I think about millennials, I really don't ever see them with their phone up to their ear. So that was a little shocking to me. But, actually, if you think about this specific transaction that we're talking about, this, I'm buying a home, it's a big, scary process. I just found a whole ton of information on the internet, maybe information overload, and now I'm looking at legal documents. It's scary, right? So having a subject matter expert that can pick up the phone and confirm or deny or explain things is going to go a long way with this audience. So make sure you keep those folks in the staff numbers to, keep that collaborative and consultative effort going with this age group.
Yeah, Leslie, I think it's interesting to note too on, we found that too, that when we used to do our own lending, that the borrower wants to know that there is somebody behind that computer. They want to apply online, but they want that interaction with a person still, even though they chose to apply online. Mm-hmm. The other thing I found was interesting to touch on that you said is the modes of communication. I think, Tony, you were on a panel with David Lycan back in January or February, and David had a stat out there that only 23% of emails that are sent out are ever opened, but a text message is opened within 5 seconds of a borrower receiving that. So again, even though they want that phone call, they will read those texts. Everybody, you know, including all three of us, have our phones probably right next to us right now. And if a text comes in, we're going to pick it up, right? We're going to glance over and look at it. So we're definitely reading those text messages within those 5 seconds.
Oh, that's very interesting, and I think it bodes well for lenders to really understand that as we enter into a new paradigm of engaging and connecting with the consumer, particularly again, the millennial consumer will be the largest cohort of borrowers. And again, as part of our next gen buyer survey, while 34% from NAR survey were millennials, when you combine women, single females, millennials, and communities of color, last year, 3 out of 4 loans were financed by one of these cohorts. And so it's really important lenders understand, how do we create that great experience? How do we make sure we can also make it easier for them to engage with us? And then most importantly, their experience through having the right systems, tools, and resources, which we're going to talk about here in just a second. So as we move to our next slide, we're going to look at taking a quick poll. And the question for today's poll is, what tools or programs do you have in place for first-time home buyers in your organization? Simply select all that apply, and then we'll see what pops up in terms of how we look at these tools and what we see here from those who are participating in the survey. So again, what tools or programs do you have in place for first-time home buyers? Select all that apply. And in a second here, Andreas, we're going to ask you to read those out to us if you have the results. Okay, Andreas, do we see anything?
Give me 1 second, Tony. Let me end the poll.
Okay, no problem.
Okay.
Here we go. All right. So 67% says they have education content. That's important, particularly today's millennial buyers. Educate, educate, educate before you sell. Mortgage calculator, that's very interesting. Only 30%, 33% say they have a calculator. Interesting stat there. FHA loans, 83%. HFA loans, housing finance institutions, for your down payment assistance program, only 50% there. Online application, we say 83%. So obviously we got to meet them where they want to be met. And then a document portal. Okay, that's great, 100%. So we see at least some technology moving and flowing in the right way. And then customer service, contact info, about 50% on the poll of the respondents. So very interesting. Leslie, Mary Kay, any thoughts about what you're seeing or trends based on this poll?
Well, I'd love to see the document portal. I think that's really important to help speed things along. You know, one of the things we did was at the end of our application, we give the borrower a list of items, and our clients have the ability to put that list in the beginning of the application as well, to say, before you even get started, you might want to get these items together, your current pay stub, last year's W-2. And then at the end of the application, based on their transaction, we give them the ability to upload those items. That just speeds things along, right? And it's secure. So we never want to have a borrower send through email a document. It's not secure. Somebody could hack into that email, but our system, our portal is secure. So they can upload those documents. It goes right into our loan origination system, and that processor can start processing right away, helping cut down. A typical transaction takes about 35 to 45 days to process. If you give that lender documents day one, you've now cut down that almost in half, right? So having that document portal is great. And I'm glad to see that we have 100% of the people utilizing something like that.
No, thank you, Mary Kay, for that. Leslie, a great lead in to, our next slide and our next subject, talking about systems that lenders, can really leverage from an API and a data standpoint to make that borrower experience a great experience. And so let's talk a little bit about how lenders can really enhance the experience for the borrower by really understanding how to integrate their data and APIs together. And then Mary Kay will kind of help give us some examples as well.
Sure thing. And thanks for that, Tony. APIs, you see the acronym all over the place, and you might be wondering, what does that stand for? So I'll tell you, it stands for Application Programming Interface. And if you're not technical, that may not help you out at all. So, I'm going to reel it in a little bit and kind of talk about it from a different perspective. But, as you're putting tools and solutions out on the market, you may find that there's a lot of data and need for different solutions and systems to talk back and forth to one another to kind of bring a nice customer experience seamlessly out to that end user. And APIs are what allows two systems to talk to one another. So in an example, and I think Mary Kay, you'll have a whole bunch to talk about here, but the mortgage calculator was one thing I saw in that last list, that I think everyone should have a mortgage calculator, helping to educate, consumers on, how much they can afford, what their monthly obligation would be in certain scenarios. And I can envision a lot of APIs in use with a calculator like that, specifically for something like bringing in an accurate mortgage insurance rate so that you can have a completely accurate monthly payment displayed to that end user. So, in that scenario, you could have an API that is, your mortgage calculator is reaching out to a mortgage insurance provider like MGIC and saying, hey, I need a mortgage insurance rate for this borrower paid monthly scenario. For this, specific loan amount, LTV, credit score for this borrower, and MGIC will produce that exact rate back for you for that scenario. So that's a standard use of an API and how systems talk back and forth to one another. And then what you might be saying is, well, Leslie, systems have been talking back and forth to one another for decades. So, why is this now a new hot topic all of a sudden? Seems like old school, right? But, it is different today. A couple of things I'll say about the APIs that are being established and brought to market nowadays is in a different capacity and with a different mindset than the traditional and legacy interfaces that are out there and still being used. So the ones that are out there today, the new ones being established, I'll say that they're more right-sized to do the job. Okay, legacy interfaces are monolithic. You have to float a whole loan file back and forth just to get a couple pieces of information that are really needed. And what the APIs are doing in this day and age is they're being designed to be concise, to only go after the few pieces of data and information that truly need to be exchanged. So, to help with that whole security, we don't need to be floating entire loan files all across the industry just to get, a couple things here and there. Just use, what you need at the time you need it. And APIs, really facilitate that conciseness in that type of situation. They're also very discoverable and open and out on the web, so you can find them and collaborate about different innovative ideas and see how other people have used them and look at use cases and testimonies and understand where these APIs can be plugged in. So they're not just documentation that's, on the network drive that, 2 employees in your company know where to find it. They're like out there and available for people to come together and collaborate and solve this digital mortgage journey together. So, very well documented, and not just for the developer. Developers do a lot of great work to get APIs up and running, but it's folks like your product managers and product owners and, maybe even operations and management folks that are looking for, how are we going to move towards this digital journey and bring automation into our roadmaps for our business processes, and, finding how APIs can facilitate that is, a different way that APIs are out on the market today. So I'll stop there, and maybe Mary Kay, you can give a couple more examples.
Yeah, I have some great examples how we use APIs within our own products today. One is, I mentioned we have Fusion Originate Mortgage Bot, which is a point of sale solution. We have an API that would allow those loans to go into any other loan origination system. We would hope that our clients use both our point of sale and our loan origination system, but we know that's not always possible. So an API allows us to take those transactions from our point of sale into any other loan origination system, but it also allows our loan origination system to take a loan from any other POS. So maybe somebody wants to use a different point of sale, but still use our loan origination system. And that same API will let loans come in from somewhere else as well. So it's a great use for us there. We also have a rate search API. So clients who want to put their rates on a different third party's website. An example of that is we have a client who uses LendingTree. So they use our rate search API to post their rates over to LendingTree. So it's a very simple, small API, but it allows their rates and products to display on LendingTree, and then their borrowers can apply right from LendingTree using our CRM API. So they put in a little bit of data on LendingTree's site, and that CRM API will start an application on our point of sale. So a lot of different ways you can use APIs. We also use APIs for third-party integrations. For example, you mentioned going to MGIC. There's a mortgage insurance API that we can build once, and it allows us to go into multiple providers of that same service. So we can get out to MGIC using the mortgage insurance API. So a lot of different ways they're used within the system versus, from a borrower standpoint to services.
Exactly. And, and as a lender, and maybe the audience that's on this webinar today, maybe that's a lot of technical knowledge, maybe not something that is, completely, what you would be managing or promoting in your organization. So let's talk a little bit more about what else about APIs. Tell me more on, what it really means to me in different terms. And what I will say, and Mary Kay, you kind of brought it up, is APIs are what gives you the flexibility to exchange and replace and bring in different solutions, cobbling together the best of breed technologies. So a CRM, a point of sale, a loan origination system, you can cobble different vendors' solutions together, all with APIs as the glue behind the scenes. Okay. And, you may remember, back in the day where you had to manually rekey things from, you had a piece of paper and then it would get faxed in and someone would rekey that in. I think we're beyond those days. But, today you will see things like imports and exports. So, where there still is some manual intervention required. You're downloading a loan file from one platform and uploading it into the other. Still a valid way to do business, but APIs could, if you wanted to replace that manual operation, there may be an API that helps facilitate that process and takes out that chance for user error. So, that's really what it means is APIs give you that flexibility. You can, look at your roadmap, look at your business processes, determine, maybe where some of the low hanging fruit is, I'd like to replace this process. It's very manual intensive, and there's APIs out there that can facilitate this and let us bring in a tool from the industry to take care of that. APIs will help facilitate that. And, it's not always that it's, it's just going to take overnight. I'm going to have all these new tools in place. Some replacement strategy, could take a little bit. So just make sure you're looking at your roadmap and putting your cost benefit together of what to replace first and how often.
Great. Let's see, I think it's time for maybe taking another poll here. If we can move to the next slide. Got a quick poll that we want to do, Andreas, if you can bring that up on the screen. So last poll for today, what percentage of your mortgage process from application to closing is digital? In this poll, we want you to only select one, 0 to 10%, 11 to 25, 25 to 50, 50 to 75, or 75 to 100. What percentage of your mortgage company's process from application to close is digital? This will be a very interesting stat to kind of see where we are as well. So we'll give it a second, let you guys kind of put those in, and then we'll read the results here in a moment. If my voice was feeling good, I would be doing the little Jeopardy. Doom, 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 doom. But unfortunately, my voice is a little sore from speaking a lot, so I won't be able to do my Jeopardy tune today. And Andreas, when you see those results, you can go ahead and certainly move those slides, those numbers up. And just as a reminder, guys, if you have any questions as we begin to continue to transition through today's webinar, please send those through the chat function. And also, as a reminder, this webinar is being recorded, so you'll have an opportunity to receive that in the next 24 hours as well. Okay. Do we have the results as we're bringing this up? Okay, for poll 2, what percentage of your processes, mortgage processes from app to close? The majority, 25 to 50, okay. 50 to 75% came in at about 20. And then we have around 40% of the respondents saying 75 to 100. Very interesting there. You know, I certainly believe that as we look and get into a more competitive environment, the more that we can create that streamlined, easy, efficient way for a lender to engage with the borrower, they're gonna have a competitive market advantage versus their peers. And so this kind of allows us to kind of talk about the operating environment as we go to the next slide. Thank you, Andres, for that. You know, looking at the operating environment and really the market environment that we're in today, and thinking about creating a more digital first centric, consumer centric experience. Mary Kay, let's talk a little bit about the lender benefits for looking at their current platform and integrating more of a digital first environment, consumer centric experience for their borrowers.
Yeah. So, you know, if we can build that digital experience for our borrowers, we can get that closing time down, as I mentioned earlier, from the 35 to 40 days to something like 25 to 30 days. You know, not always in a purchase market is that going to be possible, because we have offer to purchases that set the closing date based on when the seller typically wants to move. But on a refinance, or if that seller does want to move quickly, we can, with a digital experience, we can get them there, right? So the borrower goes on, they apply. Using APIs throughout the application path, we can pre-fill in their data. So we can reach out to their bank or their credit union and pull in their assets. We can go in and verify their employment using an API and reaching out to their payroll provider to bring in their income information. We pull the credit report. We run the underwriting at the end of the application. And really all that's left to do after they apply in about 15 minutes is order an appraisal in some cases and get a title policy, and you're ready to close. And I have a good example of that. I purchased a home back in February, and my lender I chose did the asset verification, did the income verification, and I got an appraisal waiver when it ran through Fannie Mae for underwriting. So all that really needed to be done was my title policy. So in a matter of minutes, I was actually ready to close that transaction for the seller. So it puts the seller at ease. They knew my whole transaction went through in 20 minutes. without needing anything other than a title. So it gave the seller peace of mind that they knew that transaction was going to close in the 45 days that was set in our offer to purchase. And it actually, for me, was really boring. I'm like, oh, I'm just sitting here waiting to close my loan. You know, there was nothing I needed to provide anyone because of that automation within the system. So using automation and that digital experience really speeds things up. One of the things that we're working on now or have just actually released is the ability to do e-closings. So that borrower now, they've done out their application online and they can actually do most of their closing transaction online as well. Some places don't have the ability yet to do remote notaries, but you can do all of the other documents, do electronic signatures online, and then all you have to do is meet with a title or a closing agent to actually sign that mortgage in person because it needs to be notarized. Some places throughout the country also offer remote notaries as well. So really speeding up that transaction. And not only does that benefit the borrower, but it benefits the lender to speed it up too. If you do an online closing, everything is signed electronically. There's no real audit process that's needed to make sure that somebody's going through that loan package and making sure every document that needed a signature was signed, because it was done electronically and it directs you to everything that needs to be signed. You also now have that closing package back the same day and you can go on and deliver it to your investor. So it really speeds up the process by doing that whole digital experience.
That's a great process, great thought process there in terms of helping lenders to understand how to make it simple, how to make it efficient, and most importantly, how to create that great experience. You know, let's go to the next slide. Well, first of all, Leslie, anything else that you want to add to that as it relates to, you know, some of the points that Mary Ann highlighted as well, Mary Kay, excuse me, highlighted?
No, actually, that, you know, I have a similar story with a recent refi that I did and e-closing and such, but yeah, it really can help shave some days off of that process and, you know, user error and, you know, have everything, you know, up to snuff from an audit and compliance perspective. So exactly.
So as we, you know, transition and talk about obviously systems, processes, and making sure that a lender understands the ability to create a competitive advantage, to connect and make it easy for the consumer to do business how they want to do business, as Mary Kay talked about, and in terms of the different lanes that consumers, particularly millennials, can take, that is very, very critical and very, very important. Another area that is going to be important for companies and lenders as they move forward is matching the marketplace to the talent in terms of making sure that their sales force and their operations staff represents and can serve and really at the end of the day, connect and engage with this different borrower who, again, is the millennial cohort versus a baby boomer. And so obviously, within our industry, we know that right now, attracting and retaining talent is just as important as having a great POS system that allows you to be connected, allows the consumer to be connected from beginning to end. You need that great POS first, in my opinion, then you need also a great talent and acquisition strategy. And so one of the things that we're seeing in the marketplace right now is particularly for lenders on the sales side. The millennial workforce is obviously just as much as they will be a huge driving force for business, will be a huge driving force for employment over the next 5 to 10 years in our industry as well. What does it take to create a great environment? What are they looking for when you talk about best places to work? What we've seen from NAMBA through our NAMBA consulting arm, which helps companies understand how to attract and retain great talent. First and foremost, what companies and millennials look at is they say they want a company who is mission-based. They want to make sure that when they work for an organization, they can understand their purpose and connect their purpose to their job. Why am I here? And because I'm here, am I making a difference in my communities as well as in the areas that I like to do business in and serve? The second piece that is important is millennials want to make sure that at the end of the day, their lender gets it. Their lender understands what's important to them as it relates to their communities, making sure that they give back to the communities in which they live, work, and serve in. And then most importantly, making sure that their job is helping to make a difference in others. And this is how we began to kind of connect the dots from the talent acquisition side, making sure that we hire great talent that can also connect to this huge up and coming buyer population to be able to ultimately create a great experience for millennials. One of the things that is interesting when we do our surveys is that millennials often feel comfortable with other millennials in the home buying, the real estate transaction process. What that tells me quite simply is it is important for lenders to understand that building a young, diverse workforce will also help them connect and engage more to this segment as well. Leslie, let's talk a little bit about making sure we understand and maybe sharing some data and insights from some other surveys that you've seen out there in the marketplace as well.
Sure thing, Tony. I'll just mention a study from the Mortgage Collaborative, and they looked at 40 different issues. This is a study from 2021. And one of the critical issues, the number one critical issue, 41% of the time, was attracting talent across all the organizations that were surveyed. So, what you have been talking about here is making sure you have the right technology in place, but also, hiring in the millennials. And I'll focus, more on the fact that, with us being in this last few years of working remotely, we've had the opportunity to fine tune and establish all these capabilities to get us up and running in a remote work anywhere environment. And that is really important. What it has also brought is, you can gain talent from anywhere across the country. So you have this large pool to choose from, but, the double-edged sword there, the double-edged sword there is that if this large, pool across the United States can be hired into your organization, this large pool can also be hired everywhere else. So it's kind of a double-edged sword from that standpoint. So, we just want to really make sure that you have the tools that are going to make your employees look good to the borrowers that they want to serve and make them better at what they do. So they really need that technology out there to make that a great customer experience. And if you have things like that, you're one up from someone who doesn't.
Great. And speaking of technology, obviously, I still have not, after hundreds and hundreds of webinars, learned how to master cutting in my phone off through the webinars. So I do apologize. I am definitely, as you see, the one that when technology is easy to use, it creates a better experience. And certainly I'm a true testament to that. So I do apologize for the phone ringing there. Let's transition as we begin to close out. Again, if you have any questions, please send those over. But as we look and close out today's webinar, next slide, Andreas, please. Let's really talk about making sure that for lenders, Mary Kay, what are 1, 2, 3 things that they can do today to start thinking about creating a more simplified, efficient, streamlined process for their borrowers, particularly for the millennial buying generation?
Yeah, I think, the first thing is really having that online mortgage application. They want to apply where it's comfortable for them, but also having the education out there. So in our system, we provide a number of FAQs, so a lot of frequently asked questions, and you can customize them to your practice. You can add in a link to YouTube videos on, the home buying process. So really, it gives you the ability to educate your borrower before they even start that application process. But as I said, the application is just one part of it. When that application comes in, whether it's from our system or another system, is having a process to reach out to that borrower and let them know there's a human behind that application. If you don't, I think a millennial, anybody would be scared, like, oh no, what just happened to all my personal data I put in? Where did it go? So that reach out as soon as it comes in, or within a reasonable time of it coming in, making sure that they know there's somebody behind that transaction. And then I think the more that you can incorporate and do for the borrower within the application, the better experience they're going to have. So pre-fill in their assets where you can, pre-fill in their employment if you can. Don't make them fill out every little piece of data. They want it easy and they want it fast.
Great. Mary Kay, we have one quick question that just came in. How long does it take to stand up the Fusion Bot POS?
Yeah, the POS, we can get you up and running in about 90 days. Faster than that if you needed to. We provide you with guides and a implementation specialist that walks you through the whole thing. We have defaults for every piece of text out there. We have defaults for the Fannie and Freddie products. So we try to make it easy for you, but everything is configurable. So if you don't like the way we said something on the website, you can change it to your own vernacular. So everything is configurable, not customizable, but we do give you every piece of data, every product, every fee is configurable to your terms. So about 90 days.
Just so that if I'm not the IT or a decision maker, but I want to connect my organization to Finastra to learn more about implementing the POS system, how can they do that as well?
So easily email sales@finastra.com and it will come into our sales organization and they'll hook you up with a representative within your area.
Great. Leslie, we saw one question come in for you as well. How can they get MGIC resources on the education side as well?
Sure thing. That website is readynest.com, READYNEST.com. It's geared towards first-time home buyer and chock full of great information.
Well, look at there. 2 minutes left. Man, this has been an awesome webinar, but most importantly, if you're a lender, seriously, you've got to think about integration. You have to think about streamlined processes. And then most importantly, you got to think about making it easier for the consumer, the largest cohort of future buyers, to do business with you. And so I want to take this opportunity to thank Mary Ann as well as Leslie. We want to thank Finastra. The future of finances is open. We want to invite all of you on today's webinar. Come join us here in Orlando. Both Finastra and MGIC, which are great partners, will be there. You can learn more about their resources to help you in your organization thrive, not just survive, in 2022 and beyond. This concludes our webinar. As a reminder, we have recorded, so you will receive a recording here within 24 hours. And on behalf of Finastra and MGIC and all of us here at NAMBA, thank you for joining us for today's webinar. Have a great week, and we'll see you soon.
Thank you. Thanks for having us, Tony.
Thanks for having us.